Hey, it's Clay at claytrader.com, and this will be an analysis of some of the more popular futures markets out there for day traders. This will be a technical analysis breakdown, so if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a quick clarification. I'll be using the 1 hour time frame, meaning each one of these candlesticks here represents 1 hour's worth of time. So first market we are going to take a look at over here, the NQ, and as one reminder, the NQ is the same as the MNQ. So if you only trade the MNQ, perfectly fine. What I talk about here, you can translate over to the MNQ if you so choose. But this line here, the trend line that I drew in yesterday's video, was an important one, and it tried to maintain itself, but unfortunately, the ascending triangle, which I talked about previously, has now been violated to the downside. So just very quickly, we had this ascending triangle going into this session. But as you can see now with the break to the downside, there's no more, it makes no sense to talk about an ascending triangle pattern because, that no longer exists. So on that note, I'm just going to go ahead and get rid of all these lines as I think they serve their purpose for now, and we'll just start afresh. Now, the one level here that, let me move this. There we go. That you got to think everybody and their brother's uncle is going to be watching into the next session is this level of support right here at the 19,135 mark. So it got close today, never quite hit it, and to give credit's due, whenever the price did get down around that general area, the price held and bounces occurred. But the price is still very, very close to that area, so it becomes a more than valid question to throw out there. Are the bears going to get enough strength where they're going to be able to come down here and then push down through that level? And while there are no guarantees, more than valid to think that a break of that could create another surge of downwards buying pressure. There are maybe some stop losses hiding down there from the longs. So again, there's no guarantees in the market, but a plausible thought that if that level does not hold, you could get another surge of momentum to the downside. So certainly keep an eye on that. Like I said, I think a ton of people are going to be watching that level. So that's by no means some sort of great discovery on my part or anything like that. And then the other area to watch from just resistance standpoint is this trend line right here. I mean, check it out. By using that point and that point, look how well it's done in just forecasting each of these problem areas. I mean, the power of charts. So if the price does curl back upwards and it can get through that level and push up through it, again, no guarantees, but a break of that level, that could turn the tide and start to get people more bullish. But nonetheless, any way you look at it, in my opinion at least, these are going to be the two main technical levels to watch moving forward, and then see how the price behaves if and when the price gets up to one of these areas. So yeah, grab your popcorn for the next session. Next one here is the ES, and you got to be bearish on this one moving in the next session for no other reason other than the fact that the price has now officially broken down below this sideways channel. So it's not a whole lot, but nonetheless, the price is down below that area. So if you were to be forced into a corner and say, what do you think is going to happen next? Well, the trend's been down. It's just broken at the downside of the sideways channel. So you got to think that probability suggests it will go down further. But again, I'm using probabilities, maybes, because there's no guarantees. And I want to really reiterate that. But like I said, in this sense, let's say the price continue to drop. I don't think anybody would be there like, whoa, that is shocking. I didn't see that coming. It's been in a downtrend. That sideways channel just broke to the downside, and then it kept going down. I didn't see that coming. Again, I don't think anybody would say that. So again, doesn't mean it's for sure going to happen, but that is certainly an area where you could, nobody could accuse you of being irrational for thinking in that way. So first key update, just based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So if this thing does try to curl back upwards, first key level of resistance that it's going to have to do battle with right there around the 55, 58 mark. So keep a close eye on that. Sure, you have that level. In fact, now that I think about it, let's just try to keep this as clean as possible. So I'm just going to go ahead and get rid of that level for now. Now we can always add it back in if the price can get up through there. But as of right now, it's all about the bleeding did stop down at that area today of the 55.09 mark. But will that continue to hold as support? Is there going to be more bleeding to come? We'll see what happens. Next one here, taking a look at the YM, which is measuring the Dow Jones. And I talked about this falling wedge here. And the falling wedge, I mean, no other way to put it, it held strong. The top part of the resistance you can see earlier on in the session held strong, did not let the price get any sort of meaningful breakout. And then it came back down. It actually broke through the bottom part of the pattern. But to give credit's due, it did shoot back above it. So right now, the falling wedge is still in place. Again, I would say it's not looking as good. But like I said, the trend line, it's still above it. But if in the next session, the price breaks down through and then gets any really more sort of separation. So if the price were to break down below the lows from right here, at that point, in my opinion, the falling wedge is off the table. No, not worth talking about anymore. But because the price is still above these lows right there, like I said, in my opinion, the falling wedge is still in play. But as always, feel free to disagree with me on that one. No harm in agreeing to disagree. So again, if the price does come back up, the pattern to the upside is still in play. You have the top part of the pattern. Then you also want to watch a purple line right there, the 50-period moving average, which isn't too far away. But yes, in my opinion, at least as of right now, the falling wedge is still in play. Next one here, we're moving into the oil market and specifically crude. So we're taking a look at CL, and oil today, it once again pulled back some. And I was very curious about this trend line here on the day. It's like, okay, is this thing maybe going to start to trend upwards? So, I mean, green for support. And then you can see a few hours ago, no. Not only did it break down through the pink line, the 200-period moving average, not only did it break down through the purple line, the 50-period moving average, it also broke down through my trend line right there that I was curious about. So again, are there guarantees? There are not. But would it be shocking if this thing gets more continuation to the downside? I don't think anybody would be shocked by that. So I would say you got to be more so bearish bias headed into the next session here on CL. Now, if the price wants to prove me wrong and all of a sudden shoot back upwards and get above those areas, okay, then I'm willing to change my conversation. I'm willing to change my attitude. But as of right now, I think you got to be more bearish. But that's why risk management matters, because oil might just decide to all of a sudden and rip back upwards. But yeah, right now it does seem like there's quite a bit of bearish pressure. And now we're moving into the world of precious metals and specifically gold. And yeah, talked about this one yesterday, how the price had got up above the upper part of that channel, was above that area of resistance. It had pulled back a little bit, but mentioned, okay, if the price can stay above there, that's a good thing. Now, let me be very clear. Did I think that, this sort of late session move was going to occur? No, I did not think anything like that would necessarily occur, but it did. And now gold is, I believe, at all-time high. So going to go ahead and get rid of those levels. And not a whole lot can really be said just because it's at all-time high. So it's not like I can look back into the history and find, previous areas of resistance that could be support. But really just, in my opinion, the level to keep an eye on that maybe serves as a pullback area right here. So let me change that to green. So if the price comes down, can it get some sort of bounce off that level? In my mind, that seems like a plausible scenario. But as always, risk management matters because it's not guaranteed to bounce off that level. And then if you just prefer to maybe just use the overarching, moving average, the 50-period moving average, keyword being moving. So as that moves higher and higher, if the price, that might be an easier way to just kind of judge the overall health of the move. In other words, as long as the price stays above that purple line, then the bulls are in full health. The bulls have full control. However, you can best visualize that in your mind. As far as areas of resistance are concerned, no need to overcomplicate this. Again, at basically all-time highs. So where did the party finally stop today? Stop basically right up there at the 3,000 mark. So big old round number, not shocking to see the price stop. So yeah, 3,000 will be public enemy number one moving into the next session. But anyway, look at it. Very powerful day here for gold. So that wraps up the analysis, but before I go, I want to personally invite you to get signed up for this free live online webinar. So if you've been enjoying what you saw and you want to learn more about the tool that I use to build consistency with, manage risk with, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down below in the description area you can use to sign up. Or if you're watching right at my website, there's an area on the webpage that you can use to sign up. But it'll be very soon. In fact, it'll be this evening, Thursday, March 13th at 8 p.m. Eastern time. Now, if you cannot make it live for whatever reason, maybe you already have something on your schedule, maybe you're watching this Friday morning and you totally, you just missed it, go ahead and send me an email to clay@claytrader.com, and I'd be happy to send you a link to the replay so that you can watch it at your earliest convenience. But if you can make it live, then definitely get signed up, and I'll see you here in just a few hours. And then as far as these videos are concerned, if you enjoy these analysis videos, hit that like button, and if you're looking for a super free and easy way to support that channel, please hit that subscribe button. Thanks for watching.